What is happening, crypto enthusiasts, and welcome back to Bitcoin Bulletin. The market is absolutely electric, and the news cycle is moving at warp speed. You don't want to miss a second of this as we dive into the latest developments that are shaping our digital future. Get ready for some mind-blowing updates that are going to keep you on the edge of your seat. We've got a packed show for you today, so buckle up and let's get straight into it. First up, we're dissecting a significant shift in market dominance, with Bitcoin seeing a dip while another player is making massive moves in trading volume. Is this the sign of a changing tide or just a ripple in the pond? We'll break down the numbers and what it means for your portfolio. Then, get ready for a corporate finance shakeup as a major Japanese firm doubles down on its Bitcoin strategy, making a substantial purchase and achieving a significant market upgrade. This move signals a bold new direction for traditional companies entering the crypto space. But that's not all. We're heading to the Philippines, where a bold proposal is on the table to tackle national debt with a revolutionary approach involving a government-backed Bitcoin reserve. Could this be a game changer for sovereign debt management? And finally, we're analyzing the fallout from a recent flash crash that sent shockwaves through the market, causing massive liquidations and sparking intense debate about market stability and asset rotation. What does this volatility tell us about the current state of play? Don't go anywhere. We've got all the details and insights you need, right here, right now. Make sure to smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update. Bitcoin dominance dips as trading volume surges elsewhere. What's behind the market's current momentum? The cryptocurrency market is experiencing a period of notable flux, with Bitcoin's dominance seeing a decline while trading volumes for other assets are skyrocketing. This shift has sparked considerable discussion among analysts and investors about the underlying drivers and potential future trends. Bitcoin, after retracing gains made following Federal Reserve Chairman Jerome Powell's dovish remarks, is now hovering around previous support levels. Technical indicators suggest that further declines could be on the horizon if the key support zone near $107,500 fails to hold. This price action comes at a time when market flows, both in spot and options, indicate a clear rotation of capital away from Bitcoin and into Ether. QCP Capital, a Singapore-based firm, noted in a recent market update that Bitcoin's dominance has slipped from 60% to 57%. While this is still higher than the sub-50% levels seen during the 2021 altcoin season, the current positioning is fueling speculation that major holders, or whales, anticipate Ether outperforming Bitcoin. This narrative could gain significant traction if exchange-traded funds, ETFs, for Ether staking receive approval later this year, providing a more regulated avenue for investment in the second-largest cryptocurrency. The broader market sentiment appears to be influenced by a complex interplay of macroeconomic factors and specific asset performance. The recent volatility underscores the inherent risks and opportunities within the crypto space, where rapid shifts in dominance and volume can signal potential altcoin seasons or shifts in institutional interest. Understanding these dynamics is crucial for navigating the current market landscape and making informed investment decisions. The question on everyone's mind is whether this rotation signifies a sustained trend or a temporary market adjustment. Audience impact. Investors are closely watching these dominance shifts, with many speculating about potential altcoin rallies and seeking to understand the implications for their portfolios. But the market isn't just about dominance shifts. Corporate adoption is making waves too. Get ready to see how traditional finance is embracing digital assets next. Japanese firm Metaplanet boosts Bitcoin holdings amidst market dip. Corporate Bitcoin strategies are evolving rapidly. In a significant development for corporate treasury strategies, the Japanese firm Metaplanet has announced a substantial purchase of Bitcoin, acquiring an additional 103 BTC valued at approximately $11.7 million. This acquisition brings the company's total Bitcoin holdings to an impressive 18,991 BTC, currently worth around $2.2 billion. This move occurs as Bitcoin's price has dipped below the $112,000 mark, a retreat from the gains seen after Federal Reserve Chair Jerome Powell's recent comments. Metaplanet's aggressive Bitcoin accumulation strategy is a clear indicator of its commitment to establishing itself as a leading Bitcoin treasury company in Japan, with an ambitious target of accumulating 210,000 BTC. Coinciding with this purchase is Metaplanet's upgrade to mid-cap status in the FTSE Japan Index, a transition confirmed by FTSE Russell and set to be effective after market close on September 19th. This inclusion in a major equity index is a landmark achievement, potentially opening up new avenues for institutional capital to flow into the company, thereby providing indirect exposure to Bitcoin. Metaplanet financed the recent purchase partially through the exercise of stock acquisition rights, a mechanism that increased its outstanding shares but allowed for continued Bitcoin accumulation without depleting cash reserves. The company's evolution from a traditional hotel group to a prominent Bitcoin treasury firm mirrors a broader trend of corporate Bitcoin adoption. In the past month alone, several public companies have announced significant Bitcoin treasury initiatives, underscoring a growing institutional acceptance of the digital asset. The integration of companies with substantial Bitcoin holdings into traditional equity indices presents both opportunities and challenges for institutional investors. While it can enhance liquidity and stability, significant volatility in Bitcoin's price could introduce unexpected fluctuations for passive investors. Adding to the intrigue, Eric Trump, who joined Metaplanet as a strategic advisor in March, is expected to attend the company's upcoming shareholder meeting in Tokyo. His involvement highlights the increasing convergence of traditional finance and Bitcoin treasury management. As more corporations embrace Bitcoin as a treasury asset, the lines between traditional equity investments and direct cryptocurrency exposure continue to blur, with Metaplanet's FTSE inclusion potentially serving as a blueprint for other companies. Audience impact. This corporate adoption is seen as a positive signal for Bitcoin's mainstream acceptance, influencing investor sentiment and potentially driving further institutional interest. From corporate treasuries to national strategies, the next story takes us to the Philippines. See how a congressman is proposing a bold plan to tackle national debt using Bitcoin. Philippine congressman proposes strategic Bitcoin reserve to combat national debt. A groundbreaking legislative proposal aims to leverage cryptocurrency for sovereign debt reduction. In a move that could set a precedent for national fiscal management, a bill has been introduced in the Philippine Congress proposing the creation of a government-run Bitcoin reserve. The Strategic Bitcoin Reserve Act, spearheaded by Rep. Miguel Luis R. Villafuerte, mandates the Bangko Sentral ng Pilipinas, BSP, to acquire 2,000 BTC annually over a 5-year period, accumulating a total of 10,000 BTC. This reserve is intended to be locked for 2 decades, with the sole exception of utilizing the assets for the direct purpose of retiring the nation's mounting debt. The legislation emphasizes the importance of maintaining monetary stability and the convertibility of the peso, especially during times of economic crisis, recognizing the increasing role of cryptocurrency in the global financial system. The bill outlines stringent sovereign crypto storage rules, including the establishment of geographically dispersed cold storage facilities that will undergo quarterly audits via public cryptographic attestations and verification by independent third parties. Furthermore, any forks or airdropped assets received must be held for at least 5 years. The proposal also includes explicit assurances that private ownership of BTC will not be infringed upon, and citizens' crypto holdings will not be subject to confiscation. This initiative comes at a time when the Philippines' national debt reached $285 billion, or 60% of its GDP, as reported by the Bureau of the Treasury in January. Congressman Villafuerte drew inspiration from commodity-style reserves, such as the U.S. Strategic Petroleum Reserve or Canada's maple syrup stockpile, envisioning a similar strategic allocation for Bitcoin. This bold proposal signifies a significant potential shift in how nations might consider utilizing digital assets to manage public finances and mitigate economic vulnerabilities. The long-term lockup period and restricted usage for debt retirement underscore a cautious, yet forward-thinking approach to integrating Bitcoin into national economic strategy. Audience impact. This proposal has generated considerable debate, with proponents highlighting its innovative approach to debt management and critics raising concerns about volatility and regulatory hurdles. While national strategies are being debated, the market recently experienced a significant jolt. We'll break down the details of a major flash crash and its market-wide impact next. Bitcoin flash crash triggers massive liquidations, fuels Ether rotation narrative. Market volatility resurfaces with significant liquidation events. Bitcoin experienced a sharp, sudden downturn over the weekend, plummeting below $111,000 in a flash crash that erased gains from Federal Reserve Chair Jerome Powell's earlier dovish remarks. This significant price drop was reportedly triggered by a large whale offloading approximately 24,000 BTC, valued at over $300 million, into a market with thin liquidity. A substantial portion of these assets, around 12,000 BTC, was transferred on Sunday alone, leading to widespread forced selling across the cryptocurrency market. The immediate aftermath saw liquidations totaling $238 million in Bitcoin positions and $216 million in Ether, ETH, contributing to over $550 million in total liquidations over the preceding 24 hours. This event serves as a potent reminder of the inherent fragility and leverage-driven dynamics often present in the crypto market. When leveraged traders face adverse market movements, exchanges automatically close their positions, a process known as liquidation. While a surge in long liquidations can sometimes reset the market for a subsequent recovery, a significant number of short liquidations can fuel upward momentum. Amidst this Bitcoin sell-off, Ether has demonstrated relative resilience, trading higher and up 9% over the past week. This performance has bolstered the narrative among some analysts that institutional investors and whales are rotating their exposure from Bitcoin to Ether. The prevailing theory is that Ether, with its smaller market capitalization compared to Bitcoin, may experience a more pronounced upside from a potential upcoming Fed rate cut, which could inject more liquidity into the financial system. Market participants are observing a structural shift in demand, with ETH's market capitalization showing a marked increase relative to BTC in recent times. Some analysts believe that Ether's growing prominence as a foundational layer for stablecoins, tokenization, and smart contracts is attracting significant institutional interest, positioning it as a preferred blockchain for Wall Street. The year-to-date gains for ETH already stand at an impressive 45%, further fueling optimism about its future performance. Audience impact. This volatility has led to significant losses for leveraged traders and intensified discussions about market stability and the potential for Ether to outperform Bitcoin. That's a wrap on the major market movements and strategic plays we've covered today. But before you go, let's do a quick recap of the biggest stories. And that's a wrap on another action-packed episode of Bitcoin Bulletin. We saw Bitcoin's dominance slip as trading volumes surged elsewhere. A Japanese firm making major moves with a significant Bitcoin purchase and index upgrade. A Philippine congressman proposing a bold Bitcoin reserve to tackle national debt, and a massive flash crash triggering widespread liquidations and fueling Ether rotation. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news needs, and hit that notification bell so you're always the first to know. Follow us on all our social channels for even more insights and join the conversation in the comments below. We'll see you next time.